A very popular Federal Reserve gauge indicates that the US economy is headed for a second quarter of negative growth, indicating the rule of thumb definition of a recession. So what should we do? Should we panic and start the drama queen situation, or should we start looking for opportunities to make more money? In this video, I will talk about why this recession will happen and how you could leave the drama behind and set yourself up for a comeback. Hi there, welcome to the channel The Foreigner in America, where I teach locals and foreigners everything related to money and personal finances, including investing in the markets, cryptos, real estate, and businesses. So if you're someone like myself who wants to achieve greater wealth in life, you don't settle for pennies but for Benjamins and loves money, please subscribe to this great channel and hit that bell so you don't miss any one of my weekly videos. Also, check out my Instagram and TikTok at The Foreigner in America, and blog under the same name, and I also have a book which I will leave a link below for you to check out. So without further ado, let's begin. There was an update posted last Tuesday where Atlanta's Fed GDP Now tracker is pointing to an annualized gain of just 0.9% for the second quarter of the year. And following a 1.5% drop in the first 3 months of the year, the indicator is showing an economy that doesn't have much to do in terms of improving. Jobs are being lost because of companies downsizing. Amazon, Target, and Walmart are stating that consumers are not spending the same amount of money, and inflation is soaring into the double digits. So what this system does, called GDP Now, is to follow economic data in real time and uses it to project the way the economy is heading. Let me show you the data here, where you can see the 1.9% projection. You can see that there are a bunch of indicators to actually predict the GDP, and also the forecast was around under 3% for Q2. But now it's dropped to under 1%. So what is causing that? Do I need to go out and spend all my money on clothes? Should I go and buy an overpriced BMW? Should I go and buy a bigger house that I can't afford? No, you're not to blame for any of this. 70% of the gross domestic product is related to consumer spending, and that went down from 4.4% to 3.7%. And real gross private domestic investment will go down from 8.3, from an 8.5. So these are all indicators of an economy that is not doing well. Trade is also a big one in terms of GDP. The US trade deficit fell from to $87.1 billion in April, down $20 billion from March this year. So what this creates is our GDP to fall 0.13 percentage points in Q2. Also, corporate profits are coming down as consumers are not willing to spend the same amount of money on stuff. They finally understood after video over video telling them to save their money. Job growth is starting to decelerate as companies like Tesla announce big layoffs. Some economists like Joseph Bruselas at RSM says that the recession will happen in 2023, not this year. So there's no real reason, there's no real good outlook for these upcoming 2 years. He says that the notion of 2 consecutive negative GDP quarters is often considered a recession. It's not true. My friend, 2 negative GDP quarters is by definition a recession. So stop covering it up. The National Bureau of Economic Research, which tracks recessions, says the rule of thumb of 2 consecutive negative GDPs is often true, but sometimes it isn't. Like in 2020, where the recession only had 1 quarter of negative growth. That comment is not helping at all, by the way. Whatever anyone says, there hasn't been a point in time between 1947 and 2022 where 2 consecutive negative GDPs didn't indicate a recession, and this year isn't the exception. Another thing affecting the economy is the rates rising to control inflation by the Federal Reserve, which are totally necessary, but will slow down the economy quite a bit since people are not going to be borrowing money like before. Mortgages will slow down, car sales will slow down, loans will slow down, and money spending is slowing down already. So already Jerome Powell said that it won't be easy to control it, meaning that it will take a long time. So forget about inflation coming down in 2023 either. And Treasury Secretary Janet Yellen told the Senate that bringing down inflation should be their number one priority. Of course, inflation that is not controlled causes the rich to get richer, the poor to get poorer, and the middle class to disappear. And where is the middle class going? Up or down? You guessed right. The middle class goes to the poor class if you cannot control inflation, since their incomes do not match how fast everything else is going up. Allow me to tell you the difference between an average American and a financially savvy American, both in the middle class, in my Foreigner Insight for this topic. Forget about the rich, people whose net worth is well over 7 figures, $10 million and beyond, own corporations, have hundreds of tax deductions, and manage to keep and grow their wealth in any market, especially in the down market like this. Also, forget about the poor, making less than $30,000 a year, getting support from the government, food stamps, unemployment checks, and welfare. Nothing against them, just is not what I'm focusing on for this particular example. I'm focusing on you, middle class, lower middle, average middle, or upper middle, making from $35K anywhere close to $1 million a year. And yes, someone making $250, $350, and in that range is still considered middle class. It's the upper middle class. One person is person A, who has a job that pays $80,000 a year and no debt. It's his only source of income, cannot move to a different job right now because it's too risky since companies are starting their layoffs and hiring freezes due to the state of the economy. And person B is also middle class but has invested his money on assets like houses. So both person A and person B go to the supermarket and find out that their meat is up 40%, their chicken is up, their milk is up, everything. It's a disaster. Every month or two, things go up in price even more. Gas is unbelievable at the pump. And you're spending $300 or $400 a month only on gas. It's like a car payment. So person A only relies on the job, which is not going up with inflation. Do you think a company laying off thousands of employees is going to offer you a 20% raise to keep up with inflation? You're lucky if you don't end up being one of those guys being laid off. Well, person B, on the other side, has a job, also makes $80K, but is getting income from his houses, which is up every end of the lease. And the houses are going up in price, so which makes his net worth also increase. If he has mortgages on the properties, those only go down in time since they're fixed. If person A gets laid off, he's done. Hopefully, this person A has a solid emergency fund that covers 100% of his living expenses and debt for 6 to 12 months. Otherwise, he will be in deep trouble. But person B also needs an emergency fund but has an additional income from the properties. You can also get income from dividends but require a lot more money to produce the same amount than with rentals. Same way you save up to buy your personal property, consider getting an investment property. Best decision ever. When the economy is solid, inflation is 2%, companies are hiring, and money is in the air, person A with one source of income is happy and safe. But in these times, this person A is in great danger of falling from the middle class to the poor class very quickly. That's how people end up homeless. When they lose their homes, not able to cover their mortgage payment, or are kicked out of their apartments, not able to pay rent. When you're kicked out from an apartment, your record is stained, and it's very hard for another place to accept you. So your credit score gets ruined, which means your life will be miserable. Although a lot of people say a credit card is not important, trust me, it is. I have an 826, and I went from zero since I immigrated from a foreign country. I know best the struggles that this causes, so please fund your emergency account with 6 months of expenses. It is a must do. It includes food, transportation, and mortgage or rent payments. Stop pretending you're Warren Buffett and timing the market. Houses will go down eventually, but nothing you really care about. Stocks will go down as well, but nothing that you should care because you're investing long term. If you're a day trader, yes, be careful because you can lose a lot of money, or you're doing options or those kind of things. But you are not speculating. You're investing long term, buying a property for 50 years and gifting it to your kids and grandkids. This is the only way, besides budgeting and not spending money on stupid things that you don't need, to overcome a recession and reduce risk to come out much better and stronger financially. But remember, take control of your life and take control of your money. So thanks a lot for watching this video. If you enjoyed it and found useful information, give me a like and subscribe and hit that bell so you don't miss any one of my videos as soon as they come out. So have a great day. Don't lose any money, and I'll see you next time.